get lost in the churn among emergency rooms, jails, and homelessness. Tonight, the investigative series revealed a close look at Seattle, Washington, a city that's become a national symbol of the country's mental health crisis. That's at 9 tonight, right here on WNYC. 42 with clouds out there right now, mostly sunny, and 47, but it's going to feel colder than that because that wind's going to gust up to 43 miles an hour today. And then tonight, cold, a low around 30, but it's going to feel much colder than that, all the way down to 20, blustery and gusty with a freeze warning kicking in at midnight. Tomorrow, sunny and 49, but wind chill 20 to 30.
Join New York Public Radio's Community Advisory Board and help determine how to meet the needs of WNYC's listeners. Apply by Tuesday, April 22nd. Details at wnyc.org/CAB.
On the next Brian Lehrer Show, the New York Times is cataloging words and data being removed from government websites by the Trump administration, including content about vaccines, hate crimes, low-income children, opioid addiction, and veterans, plus many mentions of words like black, women, and discrimination. We'll talk to Times reporter Tiffany Hsu. Also, comparing the mayoral candidates on public safety. The Brian Lehrer Show, weekdays at 10 a.m. on WNYC.
Some calm has come back to financial markets this morning.
Marketplace Morning Report is supported by Amazon Business, committed to business buying solutions to empower leaders to streamline and focus on growth. Learn more about smart business buying at amazonbusiness.com.
I'm David Brancaccio in Los Angeles. Overseas stock markets and U.S. stock index futures are showing a move upward in prices on this Tuesday, even as bonds turn down, pushing up interest rates. The benchmark U.S. 10-year rate 4.16% now after moving below 4% for a stretch during the wild volatility over tariffs. S&P futures are up 1.5% now. Volatility is down, a sharp contrast to yesterday when in the hour after Wall Street's opening bell, stock indicators went from way down to way up in a few seconds, a 7% swing. This was a move based on false information. The Trump team might be willing to pause the new tariffs. Marketplace's Nova Safo and I had seldom seen such a swing for the S&P 500. Nova?
That's right, David. You and I were both watching it happen in real time yesterday morning, and it was a sight to behold. The whole thing happened within minutes in the 10 o'clock hour Eastern Time. We have a better sense today of what caused it. It appears to have been a false report that circulated on social media that the Trump administration may be considering a 90-day pause on the global tariffs it announced last week, except for China. The whole thing was wrong. But CNBC had picked up on that rumor. Other outlets did too, and markets reacted violently, swinging from a sharp loss to a substantial gain. Some $2.5 trillion went into the stocks and then out again, according to the Wall Street Journal's calculation. And that was all in the time span of just about a half hour, David.
It's quite a tsunami. And I was looking over at my screen, saw the reversal, started to do that percentage calculation, and I could see this was a very rare event, but an example of what this VIX volatility index for the stock market, Wall Street's fear gauge, has been telling us. Markets are going every which way.
That's right. And Reuters calculated that the intraday swing was one of the largest in the last 50 years. The others were almost all during the 1987 stock market crash, the 2008 financial crisis, and during the early days of COVID. So that gives you a little context there. And that volatility we're seeing could continue. We are now entering earnings season. Companies are preparing to release their first quarter results, and Wall Street will be listening for corporate leaders to talk about tariffs and how they may impact their businesses going forward, David.
All right. Thank you very much. Excuse me. Staying with stocks, London is up 1.5%, Germany up 1.2%. Tokyo's key stock index soared 6% overnight, Hong Kong up 1.5%. This even with the U.S.-China trade tensions escalating. Here's Marketplace's Jennifer Pack in Shanghai.
Shares in Japan ended higher on hopes that the Japanese will get priority in trade talks with the Trump administration and avoid a blanket tariff of 24% on Japan's exports, while China is the first in the region to retaliate against Trump's additional tariffs, an extra 34% on all American exports. If China does not withdraw these tariffs, says President Trump, there will be even more. So, reminder, on Wednesday, the U.S. will levy extra tariffs on Chinese exports totaling 54%. President Trump says he could add another 50% on top. The Chinese Commerce Ministry calls this threat blackmail, while the Foreign Ministry says if the U.S. insists on waging a tariff and trade war, China will fight to the end. In Shanghai, I'm Jennifer Pack for Marketplace.
Marketplace Morning Report is supported by Bank of America. From local shops to global enterprises, Bank of America is committed to helping businesses of all sizes make every move matter. Learn more at bankofamerica.com/banking for business. And by Palo Alto Networks. Palo Alto Networks delivers what's next in cybersecurity innovation to protect today's digital way of life. Learn more at paloaltonetworks.com.
As U.S. consumers think about buying items they expect to get much more expensive as President Trump's import taxes take hold, could be smartphones, coffee, entire cars and trucks. One price that's going down is the wholesale price of crude oil. This morning at $61, down where it was in the second pandemic year of 2021 when people weren't traveling much. While low wholesale prices can thwart President Trump's intention to increase domestic oil production, there are other effects. Marketplace's Kaylee Wells explains.
Just like any commodity in the market, there's a supply side and a demand side. The oil demand is responding like it would during any economic downturn.
On the demand side, the tariffs and recession fears, et cetera, show a weaker economy, and that means suppressed demand for oil.
Morgan Bazilian directs the Payne Institute for Public Policy at the Colorado School of Mines. He says lower demand usually means suppliers cut back supply. That makes the response this time more puzzling.
OPEC Plus said they were going to increase production, and that also suppresses prices.
It sounds counterintuitive, but Hugh Daigle, who teaches petroleum engineering at the University of Texas at Austin, says as other producers decrease supply, if OPEC Plus increases supply, then they can gain market share.
Because every time the price of oil goes up, but they don't take advantage of that by increasing the amount that they're producing, other people will make up the slack for the demand that's implied by that increase in prices,
which decreases their market share over time. So Daigle says this is an opportunity to up production and claw that market share back. It's good news for Trump's campaign promise to lower oil prices. It's not good news for his other goal of increasing domestic oil production.
There's not a lot of room for those extra barrels. Nobody really wants them.
Domestic oil producers already have faced thin margins recently. They need prices above $60 per barrel to profitably drill a new well, says energy economist Mark Finley with Rice University. And we fell to $60 this week.
What the administration's response to oil producers domestically has been is, don't worry, lower oil prices will be offset by easier regulation.
He says the hope of the Trump administration was to have lower prices and increase domestic production. But
it's hard to see how less regulation can completely offset the decline of lower oil prices.
Finley says decreased regulation could increase profits for companies anywhere from $2 to $4 a barrel. But by the beginning of this week, crude oil prices have already fallen by $10. I'm Kaylee Wells for Marketplace.
Kaylee was focused on wholesale pricing using AAA's calculation for retail gas prices. Those are actually higher than they were a week ago and a month ago. Checking stock index futures 2.5 hours before official trading begins. For the NASDAQ, they're up 1.3%. For the Dow, up 750 points, 2%. Our producers are James Graham, Naomi Rainey, Ariana Rosas, Alex Schroeder, and Erica Soderstrom. The senior producer is Meredith Garrettson-Morby. It's Marketplace Morning Report from APM, American Public Media.